Today I'm breaking down exactly how to find and analyze rental properties, strategies that work in any market, cost nothing to use, and can lead to serious profits. These are the same methods I used to become a multi-millionaire before the age of 30, build a $10 million real estate portfolio, and consistently generate over $400,000 a year in passive income. I'll also be walking you through a real rental property deal using my personal deal calculator. This is the same tool that I use to analyze every single rental property investment that I make, and you can download it completely free. Just click the link in the description. So whether you're wholesaling, fixing and flipping, or buying and holding rental properties for your portfolio, this video will show you how to find better deals, avoid costly mistakes, and earn more money on every transaction. All right, now I'm going to show you exactly how I find rental properties to buy step by step. And I'll start by pulling up redfin.com right now so you can see firsthand how I find rental properties in real time using just a few filters and a strategy that anyone can follow no matter what market you're in. This is exactly what I do when I'm looking for my next cash flowing rental property in any market. Now, there are other platforms like Realtor, Zillow, and Homes.com that you can essentially work this exact process on. You really don't need any fancy tools or expensive software. I'm literally going to show you how to do this with free tools that are available to anyone. But the key is knowing what to look for, and I'm going to walk you through all of that right now. All right, so here I am on Redfin. Now, the first thing we need to do when looking for our rental property is figure out what location we want to buy in. So I'm going to choose a random market. I've been interested in San Antonio lately. First off, I've been there, and it's been making headlines as a great place to invest for long-term investors. The economy is booming. A lot of people are moving there. And so I've seen a lot of interesting deals in San Antonio. So you might want to look at another market. Maybe you're more interested in your backyard or just another market. So go ahead and follow along on Redfin for this example. So I'm going to type in San Antonio, Texas, and we can see that there are over 13,000 homes for sale right now in San Antonio. So the truth is that any property that you buy can make a great rental property. If you think about it, you can rent it out and start producing income. And ideally, if you structure the purchase correctly, you're producing a lot more income than you're spending in expenses. So that's what can make a great rental property. But the key is knowing what price to buy it at and how to structure your acquisition. So with 13,000 listings on the market, how do we really determine what property we want to buy? So we don't just want to go chasing down every single listing and making offers on them. That's going to be a complete waste of time. So what I encourage you to do is really hone in on what your buy box is, right? What's your investment criteria? So that might mean what types of property are you looking to buy? Is it single family homes, multifamily properties? Are you interested in condos, townhouses? Think about that, and then that can help you hone in on exactly what you're looking to buy. You might also need to understand what your buying power is, right? How are you funding the deal? Because if you can only afford properties up to $600,000, then it's really no use in looking at properties that are over $1 million. So the more clear you are in your buy box, the easier it is for you to filter through a lot of these opportunities as you're looking for your next rental property. So here we are looking at the table view, right? Redfin has several different views. And so if you click on this layout selection drop-down menu, you can decide on how you want to view these opportunities. But I personally like to look at the table view just because you get a lot more listings in one place and you can see all the data listed here. So then we're going to hit this filter button. Okay. Now this is how you start to filter out through all of these homes. So here's where you can select your home type. If you're looking for condos, you can simply select that here, townhouses, etc., mobile homes. And so I personally invest in single family houses and multifamily real estate. I do own some commercial real estate, some office buildings, but mainly houses and multifamily are going to be found on Redfin, right? This is a residential listing site, not necessarily commercial real estate listing site. So I'm going to start by selecting the houses and multifamily because that's really what I primarily look for. Now, a pro tip is if you just look for multifamily real estate, pretty much all of those listings are going to be rental properties. When you have more than one unit on a property, more likely than not, it's going to be purchased by an investor who's buying it based on the income that that property can produce. So unlike single families, where the majority of the market for single family homes are owner occupants who are going to live in the property and use that as their primary residence, multifamily properties such as duplexes, triplexes, and fourplexes are often purchased by buyers that are seeking income production. So if you select multifamily, then most of these listings are going to be great rental property leads for you to look at. So now I'm just going to select both so we can see how many results show up. From those 13,000 listings, we have about 11,700 homes that have now shown up in our search. So that's still quite a few listings. So how do we distill it down even further? So let's just hop back into our filtering section. And here's where you can get even more granular. So you might be more interested in newer properties, right? So you might be interested in properties that were built in the 1980s or the 1970s or later. Maybe you're looking for something that's newer construction. Depending on the market you're in, you might only be limited to properties that are built in the early 1900s. So just as you get to know your market, you'll understand what kind of inventory is available. Here you have the property details, right? You might be interested in properties that have a bigger lot size. If you're in a market like Southern California, then having a large lot allows you to build more units on the property. This is something that I do with my California rentals, is we build additional units when there's extra lot size. That's how you can really force equity and maximize your income. But at the same time, you might also not really pay attention to that. So another pro tip is if you're looking for properties that have multiple units, even if I just selected the multifamily filter, Redfin does not allow you to filter by the number of units. That's just not something that they do here. So what you could do is you could actually increase the number of bathrooms on the property. So you can filter out by number of beds and bathrooms. So if I go up here, you can select a maximum of 4 or greater bathrooms on your property. So if you think about it, if you're buying a fourplex, what's the minimum number of bathrooms that a 4-unit property would need? That's 4. So it's less likely that a duplex is going to have 4 bathrooms. Of course it can, but if you only filter properties that have 4 or more bathrooms, then you're more likely to get results that are a fourplex or a property that has more bathrooms, of course. So let's just take a look right now. We have filtered out multifamily properties that have 4 bathrooms and up. Let's see the first result. This hit the market 2 days ago, and this is a duplex. So this is a 6-bed, 5-bath duplex. Investor opportunity. Rents are projected at $1,600 per month. Excellent opportunity to purchase cash producing in the sought after northeast side. So let's see, 6 beds, 4 full bathrooms, and 2 half baths. Okay. So it's 2.5 baths per unit. Okay. Built in 2025. So this is a brand new construction duplex property, right? So they are marketing it to investors who want a buy and hold rental property. So again, this is a perfect example of something that you might be interested in, I might be interested in at the right price as well. So this next property that we found here is another duplex, okay? So again, when you filter out with the bathrooms, you might get duplexes with 2 bathrooms per unit, which of course are generally gonna be more attractive to tenants that can rent for higher rental rates and can make for exceptional rental properties. So if we keep going, we can look at this property. This is a 12-bed, 10-bath property over 5,000 square feet. And this is a rare income-generating 4-unit multifamily property in a highly desirable Northwest San Antonio location. Includes 2 long-term rentals and 2 active Airbnb licenses. Okay, so this is interesting. This is a fourplex that's also operating as an Airbnb as well as a long-term rental. I find that pretty interesting because you get both of the benefits of the long-term stability and the consistent income and less management of the long-term rental, but then you also have the upside of the short-term rental. So it's kind of a hybrid property, which is actually pretty interesting because you can get some nice returns when you kind of have both of those going at the same time. Again, these are just some quick ways where you can find these properties. So right now, this is filtered by the days on market. So you can see here on Redfin, you can filter by the most recently listed on Redfin. So this most recent one was 2 days ago. But if you click it again, now we can see the properties that have been listed the longest time on Redfin. So this one has been listed for almost 1,200 days on the market. Okay, so there's something going on here that is not allowing this thing to sell for years on end. So this says nice brick 2-story fourplex, all units leased at this time. Most tenants have been with owner for a long time. Units 1 and 2 have 3 bedrooms, 2 baths. Units 3 and 4 are 2-bed, 1 bath. Most home in this community is of multifamily rental units. So this looks like it's in a community of some sort, and it's a 4-unit property. So I would love to talk to this agent and ask, why has it been on the market for so long? Maybe there's difficult tenants, maybe there's permitting issues, code violations. Who knows, right? We have to talk to the agent to really see what's going on. It doesn't look too terrible from the outside. Of course, it does look worn in quite a bit. This tree looks like it's overgrown and potentially touching the roof and the structure. So, but the inside's actually not terrible. I've definitely bought properties that are much worse condition than this. And the fact that it's occupied is often a good thing because you can get this property and start cash flowing from day one. The most important thing when you see a property listed for this long is to start asking questions, right? Why hasn't it sold? What's going on with the seller? What's going on with the agent at the same time? And normally we can assume that if it's been listed for this long, we can get a reduction to the asking price. So it's very likely that we may be able to get a price much lower than what it's been listed for sale at. And the current sale price is $439,000. So this is an interesting one. And, it's really a newer build. So this is pretty interesting. Let's see if there's any other information about it here. So sometimes you can get the rent information here as well. So right here, we can see that the gross annual income is $31,170. The net operating income, which is the gross annual income minus operating expenses. So that's kind of your net income if you purchase this property all cash without a loan. So that's what NOI or net operating income means. So that's $23,000 and some change. You can see what your expenses are, $7,400 per year. And you always got to take this information with a grain of salt. This has been reported by the real estate agent who's listed the property, as well as the seller of the property. And let me tell you something, a seller will typically underrepresent the expenses on a property and overstate the income that it produces. So they may manipulate the numbers. So let's say you're a seller and you're getting ready to list your property. You might plan a year or two in advance to load up a bunch of expenses in 1 year and then keep it really lean for the 12 months leading up to the sale, so that when you list it and a buyer's asking you about your property's expenses, then you can say, oh, there's really not a lot of expenses. And so it makes your property more valuable because it seems like it produces a lot more net operating income. So you got to take this with a grain of salt. And whenever you're buying a property like this, you want to really play the detective and ask a lot of questions to understand what you're getting into. So there's also a unit breakdown. You can see that unit 1 is a 3-bed, 2-bath, $800 a month in rent with 2 parking spaces, and it comes with appliances. And this unit 2 is $785 a month, unit 3 is $600 a month, unit 4 is $785. So not too bad for a property that's listed for around $440,000. This is about, if we divided the gross income by 12 and then by 4, basically, taking the annual income, turning that into monthly and dividing it by per unit, you're roughly getting $650 a month on average per unit. And per month, that's about almost $2,600 of rent per month, right? So I can already tell you this isn't that great of a deal. It's not very exciting. We can see here that Redfin estimates the mortgage payment at around $2,900 per month. And that usually includes the taxes and insurance. So at the asking price, this would not be a cash flowing property, just really from a very quick surface level analysis. So that could be a likely reason why and then also factoring in the condition as to why it's not selling. So maybe the seller is just stuck on this price and won't sell unless they get this price, which isn't really going to work for investors. And I can already tell that there's a lot of other options. I also like to look at the price history of every listing. So this looks like it's been listed since April 9th, 2022. They initially listed it at $520,000 and shortly increased it to $595,000. Well, would you look at that? And now it's been reduced to a point where it's been in and out of escrow a couple of times, and now they're kind of stuck on this 440 number for the past couple of years. So really just kind of a sad listing here, but it is a lead, right? This could make a great property at the right price. Now, this next listing is a $1 million property, right? So the other thing that you might want to filter is your maximum purchase price. Like I mentioned before, if your buying power only allows you to buy properties up to $600,000, for example, then you may want to lower your maximum price that you're actually searching for. I wouldn't only go up to your maximum purchase price, but I would actually go up about 15 to 20% to leave some room for negotiation. For example, that $440,000 property would be missed if you only filtered out up to $400,000, but I can tell you, you can probably get that property for a lot lower than what they're asking for. So leave some room for negotiation. Even if you think you can only afford a certain amount, look a little bit higher because you can always offer less than what they have it listed for. Another quick tip is if you don't want to buy a property that's in an HOA, Redfin has a simple filter to make sure that you're not buying or even looking at anything that is in an HOA. So if you go to HOA fees, you can select no HOA, and that might remove some of these listings that are in communities. And the problem with buying in an HOA is that there's a third-party governing organization that will have a say on your property, right? You don't just completely own the property. You have to get approval from the HOA, sometimes to even lease the properties. So I own a single family rental that's in an HOA in Tennessee, and every single year I have to pay them a fee just to lease the property out to somebody else. It's a few $100s a year, and I would rather not pay that, but I also have to provide a copy of the rental lease so they know when it expires so that they can charge their fee every single year. There are some benefits to buying properties in HOAs, such as common area amenities. For example, my property has a community pool and a playground and a small park. So these are things that you can't really provide on your own property. Of course, you can provide a pool, but it's just extra maintenance and you probably don't want to deal with that on a rental. But these are things that are commonly maintained, so you don't actually have to deal with it, but they are available to your tenants, which can help you rent your properties quicker. So if we keep looking at the listings here, right? So I've filtered out the price point. I've also filtered out the bathroom count. So let's say you're looking for a single family property, right? So we're looking at multifamily, which I think everything that's on here is a pretty good rental. Now I'm just going to kind of, again, reset the filters so we can kind of start fresh and look for a single family rental property because that's where I started. I started buying single family rentals. They're usually a little bit more affordable. You can put less down on a single family rental, and you can pass off all the utilities to your tenant, which is one of the big benefits of having a single family rental. So let's just filter out by houses, and let's go down to the keyword search. So San Antonio is a big city. So there's over 11,000 single family homes on the market right now. So here are some of the ways that you can filter out to find good rental opportunities. So the first thing that you can look at is the keyword search. So right here is where you can type in certain words that will allow you to filter through the listing description and only show you listings that contain those keywords. So some of the keywords that I would use when finding rental properties is cash flow, rental, investor, income, 1031. So these are just a few of the words, but if you're looking for more of a fixer, you could also search in TLC, contractor, fixer, handyman. So I typed in all those keywords and let's just see how many show up. So we went from 11,000 to about 34 homes. So we removed quite a few from the mix. So let's just take a look at some of these. Again, we're looking at single family homes under, actually, no, we don't even have a price range filter. So looking at this one, we can see this listing says if you are looking for that extra cash flow, hurry, come out and view the possibilities that this property offers. Both homes or 2-1 with CHA, separate entry for each home of Vickers. Okay, so you can tell that this property is not listed very well. They're not really making a lot of sense here, but we can take a look at the condition, right? It looks like it needs a little bit of work. The inside's a bit dated. So seems like they're advertising this as a rental property. It's been on the market a couple times. Doesn't really look like there's been a lot of action. So again, just kind of a standard opportunity here. So additionally, we have this sorting feature on right now. So this is the longest time on Redfin listing, so kind of proves the point. I didn't even realize that. The way that this is listed just tells me that there's really not a lot of care and attention to marketing and advertising this property. So just the fact that this description is like this, not the greatest photos, they're not really doing an awesome job at trying to sell this property. So let's just take a look at maybe some of the newer properties that have been listed. We can see this one was just listed yesterday. It says turnkey Airbnb or single family home, fully updated, move-in ready. So it looks like the outside's freshly painted, maybe even some new siding. The inside look like it's staged, might even be virtual staging. And yeah, it looks like it is turnkey. So this looks like a good opportunity if you're looking for something that you can just buy and rent out immediately. It's a 2-1, so smaller as far as the bed bath count. So you'll just have to analyze this property to see if it's a good investment at their asking price, or if you have to ask for a lower price, which is, in real estate, everything's negotiable. So later in this video, I'll show you how to analyze a rental property so that you'll know exactly what price to offer so that it's going to be a great investment. So moving on, let's just take a look at some of these other listings. I like to just kind of skim through the options and just kind of see what's available. And of course, you want to understand what locations and zip codes as well. That's a big part of real estate investment. So if you can hone in on a couple zip codes, that can also help you filter out the deals that you're going to actually want to pursue. So let's just take a look at this property. This looks like it's an investor special. It's looks like it's probably more of a fixer. It says it's a unique property, includes a detached apartment, perfect for multi-generational living or guest accommodations. Whether you're an investor looking for cash flow or a homeowner needing extra space, this is the opportunity you're looking for. So it's on a pretty large lot. It's 0.63 acres. It's a single family, been on Redfin for 8 days. So if you're looking for something that needs a little bit of work, then those are the keywords that you might want to look for, where it says investor, handyman special. You can tell just from these photos, the wallpaper looks like it's been on there for a very long time. The carpet is pretty worn. The ceiling is a popcorn ceiling, which is definitely an older style. So you can just kind of tell from the finishes, right? The wallpaper, again, the carpet. These are all telltale signs that this is an older property that really hasn't been updated for quite a while. So if you want to get into something, this can allow you to create equity, to force appreciation. If you're a value add investor, meaning you don't want to just buy a turnkey property ready to go at full market value, you want to buy something where you can rehab it yourself, make the improvements, and then really rent it out or sell it for top dollar. This is what we can also find when we're using the keyword search, using some of those search filters. All right, so I want to show you some additional filtering strategies on Redfin to help you find great rental property deals. So a couple of things that I like to do is look at the price reduced properties. So right now we've got all price reductions. So you can select if you want to see properties that have been reduced in the last day, 7 days, 30 days. So I'm going to click 30 days. So we can see properties that have been price reduced. And then I'm also going to add in the multifamily properties as well, just to see what's available. So now we can see 11 homes that have recently had price reductions that indicate seller motivation, right? They're a little bit more open to negotiate. And then now we can kind of filter based on a couple of different things. I also like to filter based on the price per square foot. So if you're looking for a good deal and you want to buy something at a relatively cheap price for the amount of house you're getting, you can go by the price per square foot. So for example, this property right here says it's an investor special. It's almost 1,200 square feet for less than $100,000. Okay, so you're getting a pretty good deal for the amount of money as far as how large the property is. So it looks like it probably needs some work based on the photos. So this is more of a value add opportunity right here, but it does look like it's a duplex. So you're getting 2 units for less than $50,000 a piece, which seems like a pretty great deal. So it all depends on the analysis, which we're going to get to in a bit. So again, just kind of combing through, you can see if there's anything else that kind of piques your interest. This one right here looks like it's a pretty nice exterior. The inside looks pretty nice as well. Probably needs a little bit of updating and repairs, but something like this, we're just gonna have to run the numbers and see what it looks like. So, and finally, if you're looking for a specific type of property, such as a duplex, triplex, quadplex, you can also search that in the keyword search and see what kind of results that you get. So let's just try that. So maybe you're looking specifically for a triplex. So let's see what shows up in the keyword search function. So of course, we can just look at everything. So I just reset the filters here so we can kind of start fresh. Let's just search for triplex and see what comes up. So there's about 25 homes that showed up for the triplex keyword. I can tell that some of these listings are land, which I'm not sure why those are showing up. It's probably a development opportunity if you want to buy something that you can build on. Of course, those are always available. Let's take a look at this one. This seems kind of interesting. So this says it's a newly built, never lived in triplex. So 3 modern units with open concept layouts, high-end finishes throughout. So if you're looking to buy a brand new construction triplex, this could be a really good opportunity. If you want something a little more higher end, low maintenance, something that's absolutely turnkey, this can be a really interesting opportunity. You can tell that this is pretty nice on the inside. There's absolutely nothing you need to do, but it is $1.3 million. So you're probably paying a premium here. But if you're looking for a house plus a rental, you could live in one of these and then rent out the other ones to help offset your mortgage. So that's obviously a good strategy for something like this. So we can see that most of these are triplexes. So this is a pretty good way to filter out if you're looking for a specific unit count. So nice, pretty easy way to find those types of deals. Why don't we try fourplex as well? So for fourplex, you could say fourplex, quadplex, those are kind of the same thing. So if we type that in, we can see how many properties show up. So there's 7 of those listings, and all of these look like they are quadplexes. This one says extremely motivated seller. Commercially zoned quadplex is fully occupied and bringing in $3,900 a month in gross rents, crushing the 1% rule and offering strong cash flow from day one. So very interesting. Yeah, I would run the numbers and see if this is a good one because it does exceed the 1% rule, which is great. It all depends on the location, of course. If you're in a rougher neighborhood, then you definitely want to have higher rents. But I would say this is definitely worth looking into. So I'm going to just kind of bookmark that for now. So at the end of the day, if you find a set of parameters that meets your investment criteria and you like the search results, what I encourage you to do is save that search filter, and then you can set up instant notifications whenever something hits the market on Redfin that matches your buy box. So you'll get an email instantly so that you can be on top of that lead and submit an offer within that same day if you're quick and ready to pounce. This way you can stay on top of the market and never let a good deal slide by. So once you're really serious about buying deals, that's something I encourage you to do, to stay on the market and make sure you stay in front of the deals that are coming your way. So the next site I want to show you how to find rental properties is called LoopNet. LoopNet is more geared towards commercial real estate. So you can find apartment complexes, typically 5 units and up on LoopNet. These are more deals that are listed by commercial real estate brokers and commercial real estate agents. So that means you can typically find other types of rental properties for sale, such as retail properties, industrial buildings, and office buildings, So if that's what you're interested in, LoopNet can be a fantastic resource to find rental properties to pursue. So let's take a look at LoopNet here. We're on the homepage. So again, you have to start with the location. Where are you looking for deals? And ultimately you can hone in from there. So why don't we just look at San Antonio again, since we were just there on Redfin. And from here, you can see a lot of rental properties, right? Rental property doesn't always just mean housing, right? You can buy a commercial building and rent it out. That's a rental property. So let's just kind of focus this search, this example, on residential properties. But I do want to show you what's available on LoopNet, because there's a lot of stuff that just isn't available on Redfin or Zillow or Realtor.com that is available here on LoopNet. So first off, you can search for a lot of different types of properties and subtypes. So you can see here that you can find office, and even within office properties, you can look at industrial live workspaces, medical office, office residential, telecom hotels, and data hosting, right? So there's a lot of different types. You've got industrial, distribution, manufacturing. You've got retail, which can include a lot of different types of properties as well, right? We're talking about banks and drugstores and gas stations. So a lot of different types of properties here. You got shopping centers, healthcare facilities. So let's just hone in on multifamily, just so we can really compare to what we were seeing on Redfin. So we can select multifamily and really even get more granular here, such as mobile homes manufactured, dormitories, garden style apartments. We can also select residential income here, which also includes a lot of different types of housing that isn't listed under multifamily. So it could be a single family property that's really being used as a certain type of income property. So I always like to select this as well, just to get a full picture of what's available. You've got condos where you can include or exclude. You've got portfolios, which are really interesting. If you're trying to buy 5, 10, 20, 30 properties at a time, some sellers are selling large portfolios of properties. So you can really negotiate a better deal when you're buying more properties at the same time. So you have the opportunity to buy portfolios, which is something that is not available on Redfin either. You can even find businesses for sale on LoopNet, which is really interesting. Further, you can hone in on metros and submarkets and even intersections. So those are really interesting filters that you don't typically see on the residential sites. You also have auctions, triple net leases, distressed, as well as they also have their keyword search here, which is really interesting. You can also search for cap rate here, which is fantastic. I love this feature because you can set a minimum cap rate and a maximum cap rate. So if you're really income focused and you want to just find the highest cap rate deals, then you can really set your parameters much more targeted here for income producing properties versus Redfin or Zillow, which is geared more towards traditional residential buyers. So I typically leave a lot of these blanks just so I can get a feel for what's available on the market. And so let's just take a look at San Antonio. Again, the only filters that we have on are the multifamily as well as the residential income. So that's all we're looking at right now. And we can see that there are 30 results in San Antonio. So we did see a lot more in Redfin because that's including some of the more residential, like the 2 to 4 unit. So a lot of these that we're looking at right here, this is a 6 unit. There's a 72 unit. There's a 14 unit. Getting all these pop-ups here. So there's a 48 unit. This looks like a development project. There's nothing really here listed. Yeah, this looks like it's a development. So you're going to get some of those here as well. We've got an 8 unit, another 8 unit. There's a 3 specialty property portfolio, it looks like. There's duplexes here that are sale as a package. Here's a 4plex. So you're seeing a lot of different opportunities here. So if you're interested in buying a bigger property with more units, especially if you're in like a lower priced market, then I would highly suggest looking at LoopNet to find your next rental property. So why don't we just take a look at one as an example so we can kind of dive in and look at what these kind of listings look like. So this particular deal is a 28 unit apartment building offered at $4.2 million or $150,000 per unit. It's offered at a 6.67 cap rate, which is essentially the net operating income of the property divided by the asking price, right? So in this case, it's a $4.2 million property that's producing about a 6.67% yield on that money if you bought that property all cash. So there's a quick formula that you can use to figure out what that net income is, and it's simply multiplying the purchase price by that cap rate. So we would take 4.2 million and divide it by 6.2%. So this property is producing just over $260,000 of net operating income every single year, which would represent that 6.67 cap rate. But you don't always have to do the math yourself, because on LoopNet, you're typically going to see more detailed financials than you will on the other sites. So let's just see, there's an attachment here that we can click on and kind of just get some more information. So a lot of times there'll be marketing flyers. These are often called offering memorandums, or OMs. This is pretty common in commercial real estate, where you're going to get information about the market, the property, the financials. So you can see at this table of contents, there's the annual property operating data, as well as some other details about the overall investment. So this is where you can really study the financials. There's photos, so there's a lot of information. So this is really the marketing package for the deal. And depending on who's listing it, they can come in different formats. So this is pretty interesting if you're an apartment investor. So you can really get the financials here. You might have to log in and click around to get the detailed financials. So we can see that this property produces over $400,000 per year in gross income. And then the net operating income doesn't seem to be listed directly right here, but we know with that formula how to calculate what the advertised NOI is on a property like this. And as I said earlier, whatever's being advertised here, you need to trust but verify, right? This usually is going to represent the expenses as being lighter than they are, right? Underestimating some of the expenses and potentially even overestimating or showing the income in its best light. So you just have to be the detective ultimately if you're considering to buy something like this. So real quick, let's just take a peek at some other listings here. You know, maybe something that's a little bit more bite size. We can see that there's, let's look at this fourplex. So this is a little bit more of a bite size kind of deal. So this is offered at a 6.15 cap rate, $231,000 per unit. And the total purchase price is $925,000. So this looks like it is a new construction property just from the looks of it. Right here, it says it's a 2023 build. So there is a lot of new construction happening in San Antonio. So not surprised to see this. And at a 6.15 cap rate, doesn't seem to be a terrible deal just on the surface. But of course, it all comes down to the details. So if we kind of scroll down, we can see where it is on the map. So this looks to be on the east side of San Antonio. And I'm just looking to see if there's any kind of downloadable marketing package, which it doesn't look like it. So this is something that you're going to want to reach out to the broker and get a little bit more information on. So one of the things about commercial real estate is that it's largely about relationships, especially with real estate brokers. This is a very overlooked feature about LoopNet that I want you to really take down. So if you're looking at these kind of listings and you're serious about buying properties in a market, I encourage you to call the listing agents on these properties, because these are the brokers that have access to inventory. They're actively marketing and selling deals in a specific area. So build relationships with them, call them up and compliment them on their listing. Let them know that you're a buyer in the market for something like they have available. And whether or not it works out with that particular deal, you might just share your information. Maybe you'll meet up with them for coffee or lunch and really just try to build a relationship with them so that when they get access to deals, they can send them directly to you, sometimes before they go on the market or before they shop them around to other investors. This is how you move upstream in the deal flow in your market. So just because a property is listed and maybe it might be pending or already sold, the fact that the agent's listing information and contact info is directly on the internet, that's an invitation for you to call them and build a relationship. This is another fantastic way to find rental properties. All right, and finally, if you want to shortcut this entire process of finding real estate deals and start getting these rental properties delivered directly to your inbox, make sure you get on our turnkey property investor list. This is where you'll get access to fully rehabbed, pre-vetted, and cash flowing properties in strong, reliable markets. These are the same exact deals that my team and I have invested in ourselves over the past 10 years. These deals are all professionally managed, cash flowing from day one, and built for investors that want to build wealth without having to deal with tenants, toilets, or trash. This is actually how I got started in real estate back in 2015, and it's still one of the smartest, most passive ways I invest today while still getting all the benefits of direct real estate ownership, including rental income, appreciation, leverage, debt paydown, and major tax write-offs. All you have to do is click the link below to learn more and get cash flowing turnkey rentals sent directly to your inbox. All right, awesome. So now we know how to find rental properties to buy, but here's the thing. This is where most people stop. They think they're just crushing it just by finding rental properties for sale, but the truth is finding a deal doesn't make you any money. That's really just the beginning. The real part, the money-making part, comes from analyzing rental properties. And that's exactly what we're about to walk through next. This is the stuff most people don't talk about or teach, and honestly, it's probably because they don't know how to do it or they don't actually do this in the real world. But I do. I live and breathe this stuff, and I've literally analyzed over 1,000 deals. So I'm going to show you exactly how I analyze a rental property step by step using the exact calculator that I use on every investment. Plus, I'm giving you these tools for free to follow along so you can learn how to use it in your business and close profitable deals. All you have to do is go to realestateskills.com/calculator to get your copy and follow along during this example. So let's go ahead and take one of the deals that we found together and analyze it to determine what price is going to make it a great investment. All right, so I've pulled up our rental cash flow calculator. So this is the tool that's going to help you understand if this property is a moneymaker and worthy of your investment. So let's take a look at this deal on General McMullen Drive in San Antonio, Texas. So let's just take a look at the asking price. And I know we're going to be able to negotiate a better deal than this because that's what we do as pros. So I'm going to start with the purchase price. So let's just plug that in here, $360,000. So this is a quadplex, right? Commercially zoned quadplex. So that means we're going to have to put at least 25% down. Typically with single families, you can put up to 20% down, but with multi-unit properties, you have to put at least 25% down. All right, so I'm looking at our rental cash flow calculator. This is the exact tool that I've used to analyze millions of dollars of real estate. And this is the tool that's going to help you determine whether or not you want to buy a particular property and really understand the numbers on a rental investment. So I would highly recommend downloading it now, save it somewhere where you can easily access it as you're looking at deals. So hopefully you found several interesting properties through the process that we just went through together. I'm sure you have. And if you haven't, let me know in the comments because I'd love to help you figure out how to find some interesting leads so you can analyze. So first off, let's just find a property. Let's go back to this deal that was a fourplex from an extremely motivated seller. It's commercially zoned and it's bringing in $3,900 a month. I'm very confident that since it's been listed on the market for 270 days at this point in time, we can get a better price than $360. So I'm just going to plug that in for our initial purchase price. So our down payment, since it is a 4-unit property, is going to need to be at least 25%. So when you're buying a single family property, you could put 20% down, meaning you can have higher leverage, which can often amplify your returns. But with a multi-unit property, you're going to be putting at least 25% down. That means we have a down payment of about $90,000. So our renovation, rent-ready repairs, let's just take a look at the condition. So the exterior looks okay. Doesn't look like it needs anything immediately. It looks a little bit rough, but we might want to paint the exterior. Might want to just fix some of the peeling paint. The interior looks, a little bit rough, but looks relatively move-in ready from these initial photos. Doesn't look super exciting, so kind of lower end, maybe just some minor repairs. So I always like to budget at least $5,000, when I'm buying a property, because there are some things that are probably going to need repair, right? Just some plumbing, electrical upgrades, things like that, just safety things, fire extinguishers, smoke alarms. Looks like the AC unit might be missing right here. There's this little cage in the window. So stuff like that, you just want to budget at least a few grand for. So I'm just going to plug in $5,000 here. Closing costs and lender fees. So I would budget at least 2% of your purchase price for closing costs and lender fees. So I'm going to put $7,000 just for closing costs. So to get into this deal, we would need around $102,000 of cash, right? We're putting 25% down. So our loan, we can get a 30-year fixed rate loan, which is fantastic. That's my favorite type of financing to buy and hold real estate with. Our interest rate's probably going to be somewhere around 6.5% to 7%, depending on if we buy down the rate. Sometimes you can pay extra upfront to get a better interest rate. So I'm going to put in around 7% just because that's kind of where rates are these days. So that means our monthly payment on this loan would be just shy of $1,800, right? $1,796 to be exact. So annually, we're paying $21,555 for our mortgage payment. Now, that does not include taxes and insurance, so we're going to have to factor that in separately. So now that we have our purchase price and our financing information dialed in, let's go down to the income, and then we'll get to the expenses. So our income right now is $3,900. That's what it shows in the listing. So that's what we're just going to plug in here. I'm not sure about the utilities quite yet. So this is something that I'd want to ask the listing agent about is who pays the utilities? Is it the tenant or is it the landlord, right? So sometimes we can find out down here. There's the utility section. There's financial information. So it doesn't look like there's a lot here to work with. I like to skim some of the property details. So I'd like to just open up all these tabs to see what we can learn. So we can really see how this breaks down. So they're only factoring in just over $10,000 of annual expenses. So to me, that seems a little bit low considering the total tax amount is about $7,500 a year. So the majority of that is taxes. So there also has to be insurance, right? There has to be maintenance. There has to be potentially utilities. So these are some of the things that we need to ask the seller. We need to ask the agent to really understand what are the expenses on the property, and that's the hardest part to really grasp because you're going to have to really do your homework. So call the listing agent and understand. So we're going to make some assumptions just to get by with this example. I'm going to assume that all the utilities are paid by the tenants. A lot of times these properties are separately metered and thus you can pass them off to the tenants. Sometimes the owner has to pay for everything and either include it in the rent or bill the tenants separately for utilities. So if this property is professionally managed, which I would have this professionally managed if I was buying this since I'm out of state, then I would probably be paying leasing fees and management fees or a combination of the two. So I'm going to plug in 8% for my overall management fee. Maintenance, I'd probably leave it at 7%. That's what we have here. And that's about $273 per month, which is pretty adequate for that kind of size of property. Depending on the results of our inspection, we could add more to this budget if we feel like the property has a lot of deferred maintenance, which we don't really know at this point in time. Vacancy, 8% is pretty conservative. Since we have 4 units, it's unlikely that they're all going to be vacant at the same time, although it can happen. So I'd budget anywhere from 5 to 8% on this. So I'm going to put in 6%, assuming that we can really tighten up our management and keep this property rented. Insurance on a property like this, I'm going to ballpark at least, let's call it $180 a month. And again, I'm just ballparking based on some experience with properties like this. Our taxes, Texas does have high property taxes. So what we can do is simply Google search what the property taxes are in San Antonio. And when I do that, I can see that the tax rate is about 2.69%. Okay. So if I multiplied our purchase price by 2.69%, then I would get about $9,684 per year. So I'm going to go ahead and divide that by 12. So we get about $807 per month, right? That's pretty high, so you just have to account for that. So put in $870 a month. And then water, sewer, garbage. Again, this just comes down to who pays it. I'm going to leave this as is because $150 a month will probably take care of water, sewer, garbage. Electric, again, we said that the tenants will pay for the electric and gas. Landscaping, I'm going to take a look at the photos again to see what the landscaping looks like. Didn't really seem like there was a whole lot going on. So there's no lawn it looks like. So I'm going to actually leave that at a 0. Doesn't really look like there's much landscaping going on here. There's miscellaneous. So I'm just going to 0 that out until I have a reason to include that. So with all that being said, we have our monthly expenses at around $3,815 per month, which is right around where our monthly rent is. So there really isn't a lot of cash flow at this purchase price. So $84 of cash flow on over $100,000 invested is not really a lot of money. So after collecting all the income in a month and paying all the expenses, we can realistically expect to make around $84 per month of cash flow. So $84 on over $100,000 invested is not a great return, right? So annually, that's $1,000 a year. That's only a 1% return, right? I'd rather put my money in a high yield savings account and make 3 to 4% without doing any work and taking on the risk of owning real estate. So how do we design this deal in a way that would make it attractive for us? So this is where I want you to ask yourself, what cash on cash return is going to be attractive to you? How much cash flow is going to make you want to move forward on a deal like this? So here's where we can tweak the numbers a little bit. So there's a few levers that we can pull. The most important one is being the purchase price. So if we offered, let's call it $300,000, because again, we don't have to necessarily pay what they're asking for. We have the ability to negotiate because we're smart buyers, and we don't have to necessarily pay what they're asking. So if we buy it at $300,000, that not only lowers our purchase price, but it also lowers the amount that we have to borrow in order to get into this property. So in effect, our monthly expenses go down pretty significantly because our loan payment went from around $1,800 to around $1,500 a month. So that brings our cash flow to $384 per month, which over the course of a year is $4,600. And that puts our cash on cash return at about 5.3%. And again, cash on cash return is simply our annual cash flow divided by our total capital in the deal, which now went from $102,000 to $87,000. So that is actually a lot more interesting to me. And I'd be much more interested in doing this deal versus buying this at listing price. And I'm sure you would too. So another lever we can pull is playing around with the interest rate. So one thing that most lenders will allow you to do is pay buy down points, meaning if you pay points on the front end and a point is simply 1% of the loan amount, then you can buy down your interest rate pretty significantly. So talk to your lender to see how you can get your interest rate lower by putting more money up front. And they'll actually give you a break-even point where it actually starts to produce returns on your investment in that point that you paid. So for example, if you pay 1 point to get your interest rate down by 0.5%, then there'll be a break-even point where the amount that you actually paid at closing will get paid off, and then you'll produce a positive ROI on that investment. So your lender will be able to tell you exactly what that point will be, and you can determine if it makes sense to do so. So let's see what it looks like if we paid, an extra, let's call it $7,000 to buy down the point to 6.25. So if we increase our closing cost to $14,000 and now we have a 6.25% interest rate, we can see that boosted our cash on cash return to 6.33% and our annual cash flow to almost $6,000 per year. So this is how we can design and structure our deal in a way where we can have more control over what the return is and see if we can structure this in a way that makes more sense. One other thing that you might consider is putting more down. These days interest rates are a little bit higher than most investors want to see. So if you have the ability to put more down for your down payment, then that might make more sense because you're paying less in interest. So if you put 35% down in this scenario, yes, you would have to pay $124,000 to get into this property, but now your cash flow is close to $8,200 a month, and your cash on cash return is still almost 6.6%, which is pretty attractive. So ultimately, it comes down to your risk tolerance, your criteria as an investor, and how you want to get into these deals to produce a satisfactory return. Keep in mind that cash on cash return is not the only way that you're profiting as a real estate investor. There's also property appreciation, meaning if the property goes up in value, your investment is going up at the same time. Your tenant is also paying down your debt every time you make that monthly mortgage payment. You also get massive tax benefits as a real estate investor, and with bonus depreciation coming back in 2025, it's an amazing opportunity to buy real estate and take massive write-offs. So now is a fantastic time to be buying real estate. So hopefully this deal calculator walkthrough gives you the confidence to not only find great rental properties, but also structure these deals, analyze them, and pursue them with confidence. Because if you don't make any offers, you're not going to make any deals. And if you're not making any deals, you're not building a portfolio and building wealth in real estate. So that's how you find and analyze a rental property using the same strategies that I've used to build real wealth in real estate. If you haven't downloaded the deal calculator yet, don't miss it. It's completely free and gives you the power to run numbers like a pro on every deal you come across using the exact methods I covered in this video. Just click the link in the description or head to realestateskills.com/calculator to get your copy. And if you're serious about taking your real estate investing to the next level with the coaching, tools, and step-by-step support that you need to build a 6 or even 7-figure business, check out our Ultimate Investor Mentorship Program at realestateskills.com/programs. I've also dropped that link for you in the description below. Thanks for watching, and I'll see you on the other side.